Welcome to the table.
If you found this podcast, there's a good chance something brought you here. Maybe it was curiosity, maybe it was frustration, or maybe it was that quiet feeling you get when you realize your paycheck isn't going to be enough on its own to build the kind of future you actually want. Whatever brought you here, I'm glad you're listening, and I want you to know right away, this show was made for you. My name is K.R. Talon. I'm the author of the $50 Dividend Investor, available on Amazon, and I created this podcast as a companion to that book, a free weekly resource for anyone who wants to start building real passive income through dividend investing, regardless of how much money they have right now. And when I say regardless of how much money you have, I mean that literally. This show is built on a single foundational belief that $50 a month is enough to begin. Not enough to retire on tomorrow, but enough to start, enough to learn, enough to let the most powerful force in personal finance, compounding, begin working in your favor. Here's what this show is not. It is not a show where we chase hot stocks or predict what the market is going to do next week. It is not filled with complicated charts, insider language, or strategies designed for people who already have a financial advisor. This is not that. What this show is simple, honest, and practical. Every episode is 10 to 12 minutes. One idea, one concept, one actionable step. Because the truth is, most people don't fail at investing because the strategy is too hard. They fail because nobody ever explained it to them in a way that felt accessible. That's what we fix here, every single week. In this first episode, we are going to start at the very beginning. Why $50 is genuinely enough to start, what dividends actually are in plain everyday language, and how a simple monthly habit can quietly build something extraordinary over time. Everything I share on this show connects back to the framework I developed in the $50 Dividend Investor, a step-by-step guide to building a dividend portfolio from scratch, available right now on Amazon. The link is always in the description. But even if you never pick up the book, this podcast will give you real, usable knowledge every single week. So go ahead and hit subscribe, because this is just the beginning. Let's get into it. What if the only thing standing between you and passive income, real, recurring income that hits your account without you trading your time for it, is $50? Not $5,000, not $50,000, just $50. That's the question I want you to sit with for the next 12 minutes, because by the time this episode is over, I think your answer is going to surprise you. Welcome to the $50 Dividend Investor Podcast. I'm your host, K.R. Talon, and this show exists for one reason: to prove to everyday working people that you do not need to be wealthy to start building wealth. You just need a plan, a little consistency, and the willingness to start with whatever you have right now. Let's talk about the biggest lie that most people have been told about investing. The lie goes something like this: investing is for people with extra money. It's for the folks with six-figure salaries, or a family member who works on Wall Street, or someone who already has a cushion in the bank and can afford to take risks. If that sounds familiar, I want you to hear me clearly. That belief is not protecting you, it's costing you. Every month you wait believing that you don't have enough to start is a month of compounding you will never get back. Here's a fact that might reframe everything for you. The average dividend investor doesn't start with tens of thousands of dollars. Research consistently shows that most people who build dividend income streams begin with less than $500. Many start with far less. What separates them from the people who never start isn't the size of their account. It's the decision to begin. That's it, the decision. And that decision, as I lay out in my book, The $50 Dividend Investor, starts with a single, repeatable monthly commitment: $50. The price of a few takeout meals, the cost of a streaming service you probably forgot you were paying for. $50 a month invested consistently in dividend-paying stocks is not a small thing. It is the foundation of a financial life that works for you instead of against you. Now, before we go any further, let me make sure we're all speaking the same language, because one of the biggest barriers for new investors isn't money, it's terminology. The word dividend sounds technical, but the concept is beautifully simple. A dividend is money that a company pays you just for owning a piece of it. That's it.
You buy shares of stock in a company, and that company sends you a cash payment, usually every 3 months, as a thank you for being an investor. You didn't have to do anything extra. You didn't have to show up to work. You didn't have to sell anything. The company made money, and because you own a small piece of it, they share some of that money with you. Think of it this way. Imagine you bought a small slice of a bakery. Every quarter, the bakery is profitable, and the owner sends every slice holder a check based on how much of the business they own. That check is your dividend. Now, imagine you never have to work at the bakery, never have to manage it, never have to worry about the daily operations. You just own your slice, collect your payment, and go on with your life. That is dividend investing in its purest form. And the most important thing I want you to understand is this. Dividends are fundamentally different from the kind of investing most people picture when they think of the stock market. Most people imagine buying a stock low, watching it go up, and then selling it for a profit. That's called capital gains investing, and it requires you to be right about timing, when to buy, when to sell, when to get out. Dividend investing doesn't ask you to be right about timing. It asks you to be patient. It rewards you for holding on, not for jumping in and out. And for a new investor, someone who doesn't have years of market experience, that patience-based model is not just simpler, it's actually more powerful.
There's also a behavioral benefit to dividend investing that most people don't talk about, and I think it's one of the most underrated reasons to start here. When you invest for dividends, you start to see your portfolio differently. Instead of obsessing over whether your stock is up or down this week, you start asking a different question. Is my dividend still coming? Is it growing? That mental shift changes everything. It takes you out of the panic and sell cycle that destroys most new investors. It gives you a reason to hold during downturns because you know that even when the price dips, the company is still paying you. The dividend keeps coming. And that consistency, that quarterly deposit into your account, builds a habit of thinking like an owner rather than a gambler. Now let's talk numbers, because I want you to see exactly what $50 a month can become over time. I'm not going to sugarcoat this or make it sound like a get-rich-quick scheme, because it isn't one. This is about slow, steady, undeniable wealth building. If you invest $50 a month into dividend stocks and reinvest those dividends, meaning instead of pocketing the cash, you use it to buy more shares, and your portfolio grows at an average rate of 6% per year, here is what happens. After 10 years, your $50 a month has grown to roughly $8,100. After 20 years, it's nearly $23,000. And after 30 years of $50 a month, you are looking at over $50,000. Some projections put it even higher, depending on the dividend growth rate of the stocks you hold. That's the power of compounding. Your money makes money, and then that money makes more money. And over time, the snowball gets so large that it starts rolling on its own. The tool that makes this happen automatically is called a DRIP, a dividend reinvestment plan. When you enroll in a DRIP, every dividend payment you receive is automatically used to purchase more shares of that same stock. You don't have to do anything. You don't have to log in, make a decision, or move money around. The system does it for you. And because you're buying more shares, your next dividend is slightly larger, which buys even more shares, which makes the dividend larger again. This is the compounding loop, and once it's running, it is one of the most satisfying things to watch. I cover exactly how to set up a DRIP in my book, The $50 Dividend Investor by K.R. Talon, including companies that let you invest directly with no brokerage account required, no trading fees, and no minimum beyond that first $50. Here's the mindset I want you to walk away with today. The market will go up and down. Prices will fluctuate. The news will scare you. The headlines will try to convince you that now is not the right time to invest. And I want you to remember this. There is no perfect time. There is only the time you decide to start. Consistency beats timing every single time. The investor who puts in $50 a month for 30 years without ever trying to time the market, without ever picking the perfect stock, will almost always outperform the person who tries to outsmart the system and ends up doing nothing. So here's my challenge to you before the next episode. I want you to ask yourself one question and really sit with the answer. What would your life look like if your dividends covered just one monthly bill? Not all your bills, just one. Your electric bill, your internet, your phone plan. Pick one.
And then ask yourself, what is that worth to you? Because that is the starting line. That is the goal that turns $50 a month from a small number into a meaningful mission. If this episode connected with you, please subscribe to the podcast so you don't miss next week's episode where we go deep on drip investing, how to make your dividends work around the clock without you lifting a finger. And if you're ready to go further right now, my book, The $50 Dividend Investor by K.R. Talon, is available on Amazon. It is written exactly the way this podcast is. No jargon, no gatekeeping, just a clear and honest roadmap for the everyday investor. The link is in the description below. I'll see you in the next episode. Start small, think long, build forever.
And that is going to do it for episode 1 of the $50 Dividend Investor Podcast. If this episode shifted something for you, even just a small mental shift in the way you think about money and what's possible, then it did exactly what I set out to do. Because that shift is everything. The knowledge, the strategy, the specific stocks, all of that comes next, but it starts with believing that you are someone who invests, not someone who will invest someday, someone who invests now. Before you go, I want to leave you with that question one more time. What would your life look like if your dividends covered just one monthly bill? Write it down somewhere. Put it in your phone. Make it real. Because that answer is your why, and your why is what keeps you consistent when the market gets noisy and the headlines try to scare you into doing nothing. If you enjoyed this episode, the single most helpful thing you can do is hit subscribe so you never miss a new one. And if you're ready to go deeper right now, my book, The $50 Dividend Investor by K.R. Talon, is on Amazon. Link is in the description below. It is written in the exact same voice as this podcast, straightforward, beginner-friendly, and built for the person who is serious about starting without waiting to be rich first. Now, next week on the $50 Dividend Investor Podcast, we are going deep on one of the most powerful and most overlooked tools in dividend investing. It's called a DRIP, a Dividend Reinvestment Plan. And once you understand how it works, you will never think about your dividends the same way again. Imagine every payment your portfolio earns automatically going back to work for you, buying more shares, generating more dividends without you doing a single thing. That is the compounding snowball in action. And next episode, I'm going to show you exactly how to get it rolling. You don't want to miss it. I'll see you there. Start small, think long, build forever.